Bloomberg Tech is live from the heart of Silicon Valley with Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Meta goes after the cloud giants with plans to develop its own cloud infrastructure business. Plus, the Trump administration lifts foreign access restrictions on Anthropic's Fable 5 AI model. And we're joined by Lime CEO Wayne Ting as the company gets ready to debut on the Nasdaq. Meta is taking on the cloud giants. That's the headline driving the stock to its biggest jump in a year after Bloomberg reported the company's developing plans to build a cloud business with two parts. First, selling API access to AI models running on Meta's infrastructure. Second, renting out raw AI computing power from its massive data center footprint. That's all according to sources. Now, the market reaction is telling. CoreWeave is heading for its biggest drop since February, down 15%, as investors weigh a new powerful competitor in AI compute. But you see Amazon, Microsoft higher. Maybe that reflects the scale of opportunity. Maybe they're just so entrenched in cloud computing, the market's not worried. Let's get straight to Bloomberg Tech. Managing editor, Lynn, Doan. Okay, let's go back over the reporting. This is us saying that Meta is moving forward with something in two parts. What do we need to know?
That's right. So they're developing the plans as we speak to develop a cloud business. And that could come in the form of many things, right? It could come in the form of them taking the giant hyperscalers like Amazon, Microsoft, and Google head on in supplying the kind of cloud computing that, people like Bloomberg and other companies use through these companies. It could also mean that they're just talking about selling excess AI computing power specifically. In that case, they would go head on with the so-called neo clouds like CoreWeave, as you mentioned, which is why CoreWeave is, I was just looking at the Bloomberg terminal and the share moves on both of the stocks. CoreWeave is now officially down more than Meta is up. And so clearly a lot of investors are fearing that Meta is going to take that second route and go head on with the companies like CoreWeave.
The idea of Meta leveraging its excess compute capacity is something that Mark Zuckerberg talked in the most recent earnings call. But we actually have more detail in our report. We know who's running this plan. Who are the executives involved? And I guess, do we have a sense of how much progress they've made?
Yeah, clearly they are still in conversations about it. As we pointed out in the story, the conversations are early on enough that they may decide to change their minds. But as you had pointed out, Zuckerberg has telegraphed this not just in the last earnings call, but in several earnings calls over the past several months. I remember as far back as January when analysts were asking him as part of their earnings call what they were going to do if they didn't need all of the AI computing power that they were buying up in the market. And Zuckerberg was even back then saying, don't worry, if we don't use it, somebody else will, and we'll find a way to resell it. And so I can imagine that this has been in the works and has been talked about internally at Meta for several months now.
We're reporting this is called Meta Compute, led by Santosh Janardhan, Meta's head of infrastructure, Daniel Gross on the superintelligence team, and Meta president Dina Powell-McCormack. Lots of detail, lots of impact in the markets. Bloomberg's Lynn Doan, thank you very much. Let's widen the lens. Meta's plan was initially seen as a big win for the company, right? That's reflected in the stock. But it has also raised fresh questions about the rest of the AI trade, with investors reassessing some of the companies powering the AI build-out. Bigger picture, this is what markets look like. The Nasdaq 100 is down a percentage point as we enter the second half of this year and the third quarter of this year. The story hasn't changed. AI spending remains enormous. Earnings are holding up, and investors are looking beyond hyperscalers for the next opportunity. The picks and shovels are being impacted in the moment, right? The Philadelphia Semiconductor Index also much softer in the session. But as we've just reported, it's come off its biggest quarter ever in the second quarter. There's a lot to unpack. Seema Shah, Chief Global Strategist at Principal Asset Management, is with us. It's interesting for the market to get a news story like that. Hold on. You guys have been saying for a long time you're compute constrained. You're trying to raise capex, build more, spend more, but now you are talking about renting out excess capacity. How much of a struggle will that be for the market to digest?
So good to be on. I don't know if it's necessarily a thing that the market is going to struggle to digest. It's interesting. The kind of key questions that we always get is, what is the thing that could potentially topple the tech trade? And the one thing that we keep coming back to is, return on investment. That's what people are increasingly looking for. And I think with Meta's, with this announcement, that certainly does help in that case that they'll be moving to get that return on investment, give hopefully people a little bit more confidence that everything that these hyperscalers, that these large companies are doing is actually going to pay off, and they're thinking of more innovative ways in order to deliver.
We're in a moment of time where we've sort of reflected on what was a pretty astonishing quarter. So the SOX has had its best quarter ever. But the story has also been global. I'm thinking quite a lot about South Korea, highly relevant to the memory trade. You see a global momentum in the AI trade, right? Not just here in the United States.
Absolutely. And I think that's really the new narrative that's been coming about. I mean, look, we've been talking for years and years about US exceptionalism. The thing that we're now starting to talk about, this new exceptionalism, which, yes, it's still centered on the US, but because of this enormous global AI ecosystem, you also have the parallels moving in with other countries, other segments. And specifically, as you mentioned, Korea, Taiwan, they're so heavily and closely, intricately combined with US AI that you are starting to see that play through, or at least we have seen that play through over the last couple of quarters. I think the move that we've had, though, in the last 3 months probably does raise some questions about froth, and you are of course seeing investors question about where else do we go now that we've seen such a big move there. But I think this is all part of that story of this is a global ecosystem, a global narrative. It's not simply just about the US anymore.
Seema, how closely are you tracking the hyperscaler capex, not just in this year but going into next calendar year as well?
I mean, it's absolutely key to all the conversations, all the perspectives that we have to have is, look, these CapEx plans have been increasing very, very significantly. How are they going to fund them? What does the implication mean for equity and debt markets? So I think you can't almost separate any of the conversations from those discussions around CapEx. I mean, interestingly, before we would just talk about tech, just as the one sector. Increasingly, as you talk to analysts across fixed income, across equities in different segments, different sectors, AI and the CapEx plans actually keep coming back in all of those conversations. So I do think it's very, very heavily ingrained in all of the investment decisions that people are making. Even as far as to say that, look, when investors, when they're worried about things, when they're worried about AI, they're obviously looking for diversification. This still comes back to that CapEx question: which countries, which regions, which markets are going to be there for these hyperscalers to go to?
Yeah.
So I do think it's part of every single narrative that we're having.
You just used the word regions. God, I'm going to get myself into trouble with this. My DMs are open. You all know where to find me on the socials. When is Europe going to stop being such a boring story? Like, when is Europe going to have something to say about AI and start feeling some of what we're feeling over here in the States?
I feel your pain on this. Look, it's a disappointing story to have to tell every single time when investors are questioning, but when does Europe get on the AI trade? I mean, look, they are going to be beneficiaries. You have seen companies really investing to try and benefit from the productivity gains that could come through. We do have the data center build out. There is infrastructure spending coming into play. But increasingly what you do see is that Europe is considered as the diversification trade. So it's not really about playing into the benefits of AI in a way, but it's about, look, if things go horribly wrong for a quarter or two, if there are some disappointments, at least there's Europe to fall back on. That's not a very inspiring story at all, but I think it can certainly help Europe go through. And remember, even though the story has been pretty negative over the last quarter, European markets have actually still delivered despite not being part of the AI talk.
Sorry, Europe. I'd also point out the Philadelphia Semiconductor Index is now down 5%. A lot of swings in chip stocks of late. Seema Shah, Principal Asset Management, thank you very much indeed. Now, coming up, another massive story. Anthropic wins approval to expand access to its Fable 5 model after addressing US government concerns. This broke late last night. We're going to get into it. This is Bloomberg Tech. A win for Anthropic and a shift in US AI policy. The Trump administration has lifted foreign access restrictions on the company's Fable 5 AI model after Anthropic addressed government safety concerns. Bloomberg Shirin Ghaffary is with us, broke the story last night. It's been complicated, but essentially, let's start with the idea that Anthropic can now go about reinstituting access to Fable 5. What have we said about how they'll do that? And then we'll get to the safety bit.
Sure. So Anthropic said they are going to start letting users access Fable 5 model as soon as today. So that should be starting now. And that's a big win for them because this is really their latest and greatest, right, in terms of how powerful it is. Now, people may have heard a lot more about Mythos because that made quite a splash when it was released because of how strong it was in its cyber abilities. Fable is a very similar model, just sort of with additional safeguards so that the average user cannot, in theory, hopefully go and, let's say, hack someone's phone or get into their bank account. And so for Anthropic, being able to serve Fable not just to a select group of trusted partners as they can with Mythos, but to the broader public is very crucial to keeping their business kind of going.
We're showing the chronology of how that played out over recent weeks. In the post on X, Anthropic explained that they've been notified by the Commerce Department they could do this. There's also been correspondence between the Commerce Department and the company. Do we know what it is Anthropic's agreed to do to address those sort of safety concerns that the government had?
So while the discussions were obviously private, Anthropic has said that they have worked with government on some stronger safeguards. So those are things like blocking requests if there is someone who's really trying to sort of jailbreak the system and get around, the ability to get a malicious kind of answer to help them hack something. Now Anthropic has said they've worked harder to hopefully bulletproof their models from that. And they've also said that they're working with some other industry partners, including Amazon, others, to come up with a framework, they hope, to address any kind of concerns like this in the future coming from government about if there are holes in AI systems, how they can sort of resolve them on a more systematic rather than ad hoc basis.
Just very quickly, 30 seconds, they also released a scientific research model yesterday that made quite a lot of waves in industry.
Yeah, that was a surprise. So they are going into the business now of actually doing in-house preclinical trial research. They say to find drugs that may be unaddressed by the major pharma companies. So that, obviously it's still very new and they're just getting it up and running, but more to come on that.
Bloomberg Shirin Ghaffary with both stories on the Bloomberg and on .com. Thank you very much. Anthropic's standoff with the US government may be over for now, but it raises bigger questions about how Washington regulates frontier AI. Let's bring in Allie Mellen for more, principal analyst at Forrester and also author of Code War, How Nations Hack, Spy and Shape the Digital Battlefield. This is so interesting because Anthropic has basically become, Allie, the case study in the first instance of how the different arms of government have oversight of the most powerful frontier models. Would you just reflect quickly on the news that Anthropic is allowed to proceed with re-enabling Fable access to entities around the world?
Absolutely. Well, first off, thank you so much for having me. This is a very big win for Anthropic, of course, and also for the US government, because the reality is we need the space and time to innovate, especially on something this important in these frontier models. And hopefully this is a good way for the US moving forward to understand exactly what needs to happen to make sure that we are protecting national security while also enabling innovation. Because, of course, there are two sides to national security. There's the element of protecting us against what could attack us, but there's also the element of making sure that we have the defenses to do so, which requires using these models.
I think it's really hard to understand some of this. The jailbreak concern is that actually there are guardrails in place to ensure that a malicious or bad actor doesn't use the model for malicious purposes, right? But that doesn't, banning outright doesn't kind of solve the problem totally. You're an expert in this domain. Just trying, in layman's terms, explain that concept.
Unfortunately, the reality with models like this is very similar to what we see with software. There's always going to be bugs and vulnerabilities that we just don't know about yet in software because we can't test every single variable in every single way. The same is true for some of these models. There are different ways of asking questions to these models, any way that you can possibly think of that are going to change the output. And so while Anthropic and other model providers have put safeguards in place to try to limit that and limit the risk as much as possible, we have to accept a more dynamic reality where there are going to be prompts that we don't expect that are going to give access that we also don't expect. Now, Anthropic is doing a lot to limit the potential damage of this, including making sure that they're monitoring the prompts that are coming in, that they're putting very strict guardrails so that even if there is some access that's gained, it's very limited compared to what could be possible and compared to what could be dangerous. But it takes a balance of controls. It's not a black and white issue where we can just outright block access and have no problems. We, to a certain extent, are going to continue to experience issues like this. We just need to handle them in a much better way than outright blocking access and causing challenges for organizations.
Industry wants certainty. In your analysis of the government's behavior and action so far, how do you assess the level of certainty that we will or won't get on policy?
Unfortunately, this was not the best instance of establishing certainty and trust between the U.S. government and a lot of these model providers and organizations. One of the things that we've seen is that organizations have started to try to diversify the models that they're using to prevent an issue like this from affecting their organizations again. But I will say, especially Anthropic has put out a lot of great information around this about how they're working very closely to give pre-release government access to these models, to do information sharing on when jailbreaks happen and the severity of them, to provide dedicated resources to work with the U.S. government. And these types of playbooks are what's going to help make sure that there is certainty in the future of potentially less limited access, or certainly for a shorter period of time than we saw in this instance. There are going to be bumps in the road, as there is always with innovation, but it seems like moving forward, they've at least established some common ground to move forward in such a way that organizations should face less of a hurdle in the future.
Allie, Mellen of Forrester Research, thank you very much. Now, coming up, we're going to speak with Lime CEO Wayne Ting as the company gets set to make its market debut on the Nasdaq. Scooters, bikes, Lime. That's next. This is Bloomberg Tech. The IPO window showing even more signs of life. Uber-backed Lime raised $174 million in its public debut, pricing right at the midpoint of its expected range. Joining us from the Nasdaq is Lime CEO Wayne Ting. Right now I'm seeing shares indicated opening around 27, having priced at 25, but this is an IPO that Bloomberg's saying is about 6 times oversubscribed right now. You joined Lime from Uber in 2018. It's been a long journey. Just reflect on what this moment means to you.
For sure, I think it's a huge day for Lime, and I think to see our business validated in this way is wonderful. We operate in 230 cities around the world, 29 countries, 5 continents, and we have built a differentiated business model. I think there are a lot of other companies have tried and not succeeded, but we have great unit economics. We're free cash flow positive. We continue to expand our EBITDA margins, and I feel like with this IPO, we'll have more capital to invest back into the city to bring Lime's very important service to more markets around the world.
When you point out you're already in so many cities around the world, what then is the growth opportunity? Where can you go that you're not already in?
The biggest growth opportunity is actually deepening in our existing markets, because only in our existing markets do we have the reliability where people can use Lime every single day. So we oftentimes see the fastest growth rates in some of our biggest, most mature, quote unquote, mature markets. For example, like London last year grew faster than Lime as an overall company. So I think what you'll continue to see us is to deepen deployment into our existing markets. We also still have lots of cities around the world who can benefit from Lime that doesn't have Lime. So I grew up in Lincoln, Nebraska, and I would have never expected Lime to work in Lincoln, Nebraska, but we have a great business there. During football games, during lots of major events, there are congestion, parking shortages, and Lime offers a great complement to their transportation system. And there are a lot of Lincoln, Nebraskas in this world that still can benefit from Lime. So I feel very bullish about future growth.
When I came to San Francisco in 2018, scooters were the story, but it was so different. Scooters were everywhere. Bay Area residents were throwing them into the Bay. The relationship with the city from a sort of permitting perspective was pretty fractious, and then COVID came and that really impacted the business. Does any of that still remain? How different are things now?
The world is very different today than back in 2018. One, I think the value and the value proposition of micromobility is more clear to cities. Urban transportation is broken in lots of major cities around the world. Congestion is a challenge, affordability is a challenge, pollution is a challenge, and the impact of climate change. And the incredible thing is Lime is a solution to every one of those transportation problems. So I think when we show up in a way that is obviously in support of the city's transportation goals, and we come with a commitment to compliance and safety and in supporting the city's transportation goals, I think we've improved those relationships quite a bit. We are in hundreds of cities around the world. Most of those relationships are multiple years, and we feel very good about the future partnership with cities.
You went public because you needed to. You needed the capital. So the balance sheet's kind of cleaned up now. But a story of this IPO moment is very quick return to the capital markets. So will you do that? Will you look at debt? How will you continue to fund that CapEx?
I just want to challenge the idea that we have to. I think there's lots of different ways we could have dealt with any sort of debt maturity. The reason we're going public is because we think this is a great opportunity for new investors to come into Lime. We'll have great places to deploy that capital, and it'll be a very fantastic returns to the investors who are coming in during this IPO. That excitement for the future growth opportunity and the business prospects is why we're going public today.
What about some M&A? Let's think a little bit about New York City, right? If you wanted to get deeper into cities like New York, would you look at other bike businesses?
I think M&A is definitely one area we can look into now that we have public equity and more capital on the balance sheet. I would say our bar is very high because we get 50% plus cash margins on the average trip, less than 1 year payback on the bikes and scooters. Our competitors are nowhere near those margins and returns, and many of them have been donating share to us very, very kindly, and I think we can just out-execute them and get a lot of that market share from them. And so we have to believe there's something to buy that is accretive to our investors. But I'm certainly going to take a look at all the companies out there, and I think consolidating the long tail is one of the opportunities that I see.
Wayne Ting, Lime CEO, again, Bloomberg reporting that this IPO is 6x oversubscribed. Shares indicated open, I think, around 27. Let's see what happens. Thank you so much for your time here on Bloomberg Tech. Now, coming up in the latest twist in a legal battle between Apple and Epic Games, the Supreme Court has agreed to hear Apple's appeal. We're going to get to the details next. It's halfway through the program. Do not go far. We'll be right back with markets a little softer. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Our top story is Meta getting in the cloud computing game. Take a look at shares of Meta, up 11%, on track for their best day in a year. Bloomberg's reporting that they're looking at Meta Compute, either just selling spare excess capacity as a hyperscaler, and on the other side, basically API access to models on Meta infrastructure akin to AWS Bedrock. How's that playing out with some of Meta's peers and rivals? Well, CoreWeave is down a lot, 12%, on track for its worst day since February. And then those established cloud computing players, Amazon, AWS, Microsoft, higher. Why? Not clear on the logic. Maybe their market position is so strong, the market's just kind of chill about it. But we will get some more analysis on that. Bloomberg Intelligence senior analyst Mandeep Singh writes that Meta's planned cloud infrastructure business might signal that Meta's feeling pressure to show a return on the capital spending through compute rental while AI agent offerings take longer to scale up. BI's Mandeep Singh's with us right now. So interesting because, for quite a long time, Mark Zuckerberg's been getting questions about this. Well, what happens if you guys build too much compute and CapEx is too high? What would you do? Well, Bloomberg's reporting, citing sources, and you're reacting to a pretty crystallized business plan. Give me the rest of your thesis.
Yeah, look, I think when they formed the Superintelligence Lab, they hired a lot of people to train and improve their Llama model. And they have talked about MuseSpark, being on frontier with Anthropic and OpenAI's models across the benchmarks that they measure upon. But it looks like there still isn't a product like a standalone Meta AI app that they expect to take off, or an agentic AI offering that they want to roll across their family of apps. If it's about compute rental, then they could have done this, 12 to 24 months back when everyone started really doubling down on inferencing. I feel they are late to this inferencing party, and obviously SpaceX had that big deal with Google where Google was renting for $12 an hour of GPU capacity, and that was quite attractive. Maybe that is what swayed them to get into this cloud infrastructure business.
Right.
But to my mind, I would have really been more excited if they had talked about some agentic AI offering here.
So that's so interesting because they could have looked at the success xAI had, or now SpaceX AI, and said, we want a little bit of that market. You also talk about, well, Meta's trying to get its act together on how it monetizes its AI work, right? Agentic, or literally just subscription for Meta AI. And you seem to think that's going to take time to yield, at least on the top and bottom line.
Yeah, look, I think they do have a model, but it seems like the adoption of that model, when I measure it in the context of coding agent, where Anthropic has clearly gotten a lead over everyone else. Cursor is something that xAI will look to scale up on the coding agent side. Meta AI doesn't have a big use case. I mean, obviously, they don't have coding agent functionality. And when it comes to other use cases, yes, they could do basic summaries and document analysis, but to my mind, they're still missing that big use case around AI where they would want to dedicate all their compute on the application side. And that, for me, is critical in terms of maintaining those margins. The compute rental is a crowded space. And for a company like Meta, which is 50% operating margins, this is not going to be a very high margin business in the long run.
Bloomberg intelligence analyst Mandeep Singh, so fast with the react on this big story. Thank you very much. We've got other tech headlines to go through. Bloomberg's Yahira Anand is standing by. Hi, Yahira.
Hi, Ed. It's time now for Talking Tech. First up, a massive wall of capital is flooding into AI infrastructure. Abu Dhabi's MGX has secured nearly $50 billion for one of the largest dedicated tech funds in history. At the same time, Starwood Capital has raised $10.2 billion specifically targeting high-powered data center property build-outs. Plus, TikTok parent ByteDance is taking its AI ambitions to Brazil. The company plans to build its largest data center outside of China in the $39 billion project, with the first facility expected to open by late 2027. The move gives ByteDance access to Brazil's abundant renewable energy. And staying with TikTok, the company is trying to avoid a courtroom showdown. It's close to a confidential settlement that would help it avoid a jury trial in Los Angeles this July over claims the app is addictive to minors. But thousands of similar lawsuits are still pending against TikTok and other social media companies. Ed.
Thank you, Yahira. Some breaking news on the Bloomberg terminal. The United States has decided against renewing its trade deal with Canada and Mexico. Instead, it's going to conduct annual reviews of that pact. This is all according to U.S. Trade Representative Jameson Greer. The U.S.-Mexico-Canada agreement remains in force for another decade, provided that no one country decides to exit it. But the annual reviews, instead of a longer-term renewal process, mean that the United States essentially can avoid years of contentious negotiations over the rules that govern continent-wide supply chains. So we'll continue tracking that, but that's some breaking news from the U.S. Trade Representative. Another big story, in the latest twist in Apple's long-running legal battle with Epic Games, the Supreme Court has agreed to hear an appeal by the iPhone maker. Justices will review a lower court contempt ruling that penalized Apple over how it handles payment options outside of its own app store. For more, Bloomberg's managing editor for consumer tech, Mark Gurman, is with us. Another twist in what has been a multi-year saga, complicated story. Explain the basics of it to us, Mark.
Well, the basics of this situation is come October, when the new year begins for the Supreme Court, they will hear Apple's appeal to reverse a contempt ruling that was issued by a judge in California related to its ongoing saga with Epic Games. Apple was held in contempt for the way that it addressed a ruling that they need to open up the App Store payment system to third parties. And this, as you know, all started several years ago when Epic Games started allowing consumers to buy V-Bucks or upgrades using outside credit cards, bypassing the 30% Apple payment fees within the Fortnite app on the iPhone. So this is yet another installment in that saga, and it comes down to how Apple makes money on its platform.
How has Apple responded to the Supreme Court's decision to allow a review and appeal, and how has Epic responded to this development?
Yeah, Apple's pleased. They say that this is an important moment. They call it an important question, and they're very much looking forward to making their case to the Supreme Court. Obviously, Apple's dealing with a lot of legal matters right now. I mean, this is just one drop in the bucket here. The bigger issue is what it's going through with the European Union with the Digital Markets Act. That is a legal-related issue where the DMA is trying to upend the way Apple sells products, its software features, how it operates its app store. So this is a lot of stuff in the legal department that Apple is dealing with right now. Obviously, you have the DOJ lawsuit as well, all related to regulatory matters in addition to these app store issues.
Bloomberg's Mark Gurman, who leads our coverage of Apple and also the consumer technology team. Thank you very much. Coming up, investors' appetite for rebuilding and rearming the US is still going strong. We're going to talk to the CEO of Marlinspike Partners, Neil Keegan, about its latest oversubscribed fund that aims to do just that. That's next. This is Bloomberg Tech. Let's take a look at today's big number, 98,000. That's how many private sector jobs the US labor market added in June. That's pretty good. It caps the best 3-month hiring run in more than a year. Job openings have risen, layoff figures are low. But there are areas where the picture is different, and we're talking about it on this show, so I think you know where I'm going to go with this. AI. It appears to be dragging down two sectors in particular, financials and tech. And you can see here the decline of jobs in those sectors and hiring in other sectors growing. Let's discuss with Bloomberg economics reporter Matthew Boesler. It is so confusing to pass through the data, put the charts up and say, where is AI having the impact? How is it having an impact? I leave that job to you. What do we need to know?
Well, yeah, Ed, I think it's getting clearer, as you just showed in that chart. You know, we're seeing a real split now between the broader economy and really two sectors where we're seeing a lot of this weakness, finance and tech. And, you know, I think your viewers will probably be pretty familiar with the story that's been going on in tech the last several years and, you know, been kind of continuing apace this year with all of the big investments that those companies are making in AI. I think it's really interesting, the story that we're seeing emerging on the finance side, because something to keep in mind is that the finance sector is 3 times the size of the information sector in terms of employment. And, you know, there are a lot more jobs in the finance sector that deal with kind of routine processing of various documents, insurance claims, loan applications, that sort of thing. And so that's the place where we should really be looking this year if we're expecting AI to have a bigger imprint on the workforce. And that's what we're seeing so far in the numbers.
Outside of the numbers, there's just like communication. And so tech companies are saying more and more AI is a factor. And the bankers are saying that the technology will eliminate some roles. Summarize that part of it for us.
Yeah, so I mean, you know, they're really being pretty open and upfront about this. You know, you listen to the bank CEOs, and they're you know, outright talking about job cuts, the potential for automation in a lot of these roles, and so I think, you know, you're hearing a pretty clear signal from them. And you know, one of the other interesting differences, too, is that if you look at the information sector, the tech sector, right, your kind of canonical role is a software developer. And these are people who are pretty highly paid, making more than $100,000 a year. And there's a real question there as to how much AI is going to replace those jobs versus augment those jobs. and make them more productive, right? And therefore maybe even make some of those software developers more valuable to those companies. Whereas in finance, you've got, again, a lot of low-paying jobs, a lot of customer service representatives, a lot of bank tellers still, hundreds of thousands of bank tellers working in the U.S. that are expected to be, especially vulnerable to automation over the next decade. And so that's really where we're, starting to see the job losses accelerate.
Bloomberg's Matthew Boesler, thank you very much indeed. Let's move from hiring to financing and some private markets news. Marlinspike Partners has just raised a $127 million fund to, in its words, rearm America. The oversubscribed fund is the latest sign that investors are still piling into defense tech startups. Last year was a record year for venture investment in that sector, and this year we are on track to surpass that. Joining us now is Marlinspike co-founder and CEO Neil Keegan, also served 6 years as a U.S. Navy surface warfare officer. Neil, welcome back to the program, to Bloomberg Tech. There was a lot of interest in the fund. I want to kind of start with mechanics. So you raise your next fund. We say it's oversubscribed. Clearly, LPs are increasingly interested in exposure to defense tech. How did you raise the fund? What was the process like? How did you settle on the amount?
Sure. Thanks, Ed. Well, it's great to be back here. It was on about a year ago when we were discussing Operation Midnight Hammer. So it's terrific to be back here on your show. And before I dig into those questions, I'd like to just say, we're very thrilled to be here, particularly ahead of America's 250th anniversary. This is a great country. Each generation inherited a stronger country from the last. So our central question is, what are we going to do to build for the next generation? And, that's why we set out to start Marlinspike. That's why we just went after Fund 2. And we don't see the Fund 2 closing as the end of the road. We really see it as the beginning of Marlinspike as an enduring investment institution. And so to get to the fund mechanics, we set out to raise $75 million. This was a continuation of our Fund 1, which was raised in 2022. Very, very challenging capital raising times, but we feel really good about the team and our portfolio companies and our strategy and mission for that fund. So Fund 2 is really a continuation of that. We're pleased that we more than tripled assets. We wanted to have a fund size that was modestly sized relative to some of the big multi-billion-dollar funds and firms out there, so we could stick to our knitting, be leaders in our companies, take concentrated conviction positions,
right, and
really help and guide our companies to put up uncapped returns for our investors.
We just showed some of the existing portfolio, and Anduril jumps out. Anduril now is a, let's call it, late stage growth name. What is the rest of the market in the field like? What else is out there to find?
Well, clearly, Anduril is a special company. When I ran a family office, I invested in SpaceX 12 years ago. We invested in Palantir before they went public, before we launched Fund 1. Anduril is one of our key names in Fund 1, along with Armada. So we've got a history of looking at these interesting opportunities, and in many cases, investing before it becomes obvious. Now, obviously, Anduril's obvious. They've absolutely executed and killed it, and we think there's still a lot more room to grow. And what's important about, the leading companies in our space is that they have, broken through and they have shown that they can execute, operate, and scale. And so what we're really looking for is who are the next batch of leaders that are coming up. And I saw in your logos there for Fund 2, we have a number of these already in the fund. We actually launched the fund in 24. So we like to say building the plane while flying it, which is a neat trick where you're raising money and investing along the way. So we see companies like Layup and Advanced Manufacturing, Kodiak and Autonomous Trucking, Jet Zero, we think is going to be the next national champion for aerospace for our country. So these are the companies you might not know about now, but we think you're going to know about them pretty soon.
The general broad idea is that the government of today is more open to doing business with more nimble, largely Silicon Valley-based technology companies, right, outside of the legacy primes. Do you see evidence of that? Like when you're modeling for the future growth of the portfolio companies, you have line of sight to them winning those awards through the Pentagon, Department of War, et cetera?
Yes, correct. But that's not all that we do. So this is really about a new era in American industrial renaissance. So we see the convergence of AI, autonomous systems, advanced manufacturing. Not only are they serving mission sets for national security, but also the commercial market. So we like that convergence of those sectors because we think that can really be the highest growth and the biggest productivity increase for our country and our portfolio companies. So that's why we're doing this, because it's going to make America and our economy and national security stronger.
Neil, would you call yourselves a venture capital firm, or how would you describe the sort of mechanics of what you do? And the reason I ask that is I'm really interested in this sector, specifically defense, what the exit strategy looks like. Traditional path to IPO, or if actually more likely you see strategic investors come in, acquisitions happen by those bigger legacy primes.
So, look, there's three classic ways to get an exit. One, company goes all the way to an IPO. Two, some type of M&A. Or three, the secondary markets are really building and expanding. So, we often look at the secondary markets, both buying and selling, as ways to augment our portfolio. But I think what you'll see from us continually going forward is we're going to take more of a leadership role. You'll see us leading more seed rounds and Series A's, leaning into Series B companies where we can make a real impact with our team, our access, and our insight. So that's really our sweet spot. And again, a lot of those companies, these are ideas that might not be obvious for everybody, but they become very obvious to us. And we see these companies as potential, not only national champions, but just inevitable companies that have to happen.
Neil Keegan, CEO Marlinspike, just closing $170 million Fund 2 and back on Bloomberg Tech. Thank you very much indeed. Now, coming up on the show, Kalshi just secured a $20 million deal to join the World Cup as a sideline advertiser halfway through the tournament. We've got more on that next. This is Bloomberg. Kalshi's coming off the sidelines, or should I say on, joining the likes of Coca-Cola and Visa as a World Cup sideline advertiser. Kalshi secured the deal halfway through the tournament at $20 million, a deep discount from FIFA's initial $150 million ask. News comes as USA is set to play Bosnia and Herzegovina tonight, 8 p.m. Eastern, 5 p.m. out here on the West Coast. Bloomberg's Ghaffary Doherty has the story. Kalshi's done a good deal, but it's so interesting. Kalshi's a big part of the culture of what's happening from a tech perspective in the background of the World Cup. Just what are we reporting on the deal itself here?
That's right. So Kalshi's been very active, but at the beginning of this tournament, they did not have a sponsorship deal with FIFA. ADI, this is a company with ties to the Abu Dhabi family. They were the official sponsor of the FIFA World Cup. And Kalshi, meanwhile, was very active, saw billions of trades a day on both the winners of the World Cup itself and individual games. So 2 weeks into the tournament, what we're reporting now is that Kalshi is coming in as a co-sponsor with ADI, and they're coming in at a significant discount. So we've reported that ADI, as the official sponsor, paid around $150 million to become that official sponsor of the World Cup. Meanwhile, Kalshi, coming in later, has paid ADI to be a co-sponsor at around $20 million. So this is giving them the official sponsorship title alongside ADI as a partner, but at a steep discount.
Wow, they're in big company. Coca-Cola, Adidas, or Adidas, depending on where you come from, Visa. Let's go back to the basics of what Kalshi is and does. We just have 30 seconds.
That's right. Kalshi prediction markets, you've probably seen them. This is a yes or no bet on who's going to win a specific game. And they've expanded not just in sports, but they're trying to grow economics alongside other political events as well. They're really coming up against some of the biggest exchanges, too. You have their biggest user, their biggest competition being Polymarket with a sponsorship that they have a deal with the New York Stock Exchange's ICE. And you've seen them today get very large with both the World Cup and other big sporting events.
Bloomberg's Katherine Doherty with a really top story on the Bloomberg today. Thank you. That does it for this edition of Bloomberg Tech. Recap on the pod. You know what the top story is. This is Bloomberg Tech.